Hello everybody, welcome back. We're going to have a look at Bitcoin and the Dixie and a little bit of Bitcoin dominance. So I suppose on the weekend's live stream and a few of the videos I've been doing the last few weeks, especially recently, I've been talking about the Dixie, right? And the Dixie's showing that it could be looking at a potential breakout, meaning that it's going to cause shock in the market. Now last week in traditional markets, precious metals especially, and major indexes, so they were looking pretty toppy, and you could argue, you know, what comes first, the chicken or the egg? Is the Dixie increasing, or is the traditional markets, decreasing? What is the real deal? But the main thing is, the main component that we think about with Bitcoin for me would be the Dixie. So whether it's initiated by traditional markets going down or the Dixie going up, whichever comes first, the chicken or the egg, the major impact is going to be felt across the board for cryptocurrencies, because the Dixie is the dollar and the Bitcoin is pegged to stable coins, which is pegged to the dollar. So there is a large amount of influence with traditional markets and the Dixie on cryptocurrency, and this is something we're saying we've got to be aware of, and there might be a shock in the market, basically, potentially even starting from yesterday. So we talked about that over the weekend, and we got it pretty much instantly. So the shock instantly took place. So it was a hell of a drop, definitely. And as far as chart structure is concerned, it's, for me, it's okay so far. It's pretty hardcore, I have to say. I mean, from the very top over here, which would have been down here to the liquidity grab as a 20%, all the way down here it's a 24% pullback. Yeah, you call it pullback, call it a dump, call it whatever it is. And there's no reason to rule out bear markets. When we've broken down like this on the 4 hourly, now we do have our death cross, even though it's relatively contrived. We almost got one the other day, avoided it, broke down, and essentially now we've caused it. So we do have that death cross. The main thing to think about here for me is, first of all, well, we'll bring it to a weekly. We can base it all on the weekly. So on the weekly, what we see is a retest of the very center of the Bollinger Band, the 20 weekly, the holy grail. Being above there is good, being below there is bad. Basically, that's the long story short. We also have the green 50 exponential, which is coming in at, it's 37,500, right? So that and the green 50 exponential 38,600, this is the last stand. And breaking down below these levels for me at this stage in the market would be pretty concerning. I'm not saying that it would mark the end, but it would definitely be worth noting that we shouldn't really be down there, especially closing weeklies. Yeah, and obviously we've not closed a weekly there, but if we did close weeklies down there, even though we're still within this accumulation zone, and even down here is an accumulation zone all the way down to 28,000, but really for me at this stage in the market, we shouldn't be closing candle bodies below 37,500, which is where it is right now. I mean, prior to this, it has been lower. It's obviously, when we first broke down here, it was 33, but since then we've moved all the way up here to 37.5. So that would be a problem for me. And even if we did come down to there, I might consider basically selling up large portions of my portfolio, because it could potentially mean bear market is underway and we've already reached our peak. But for the moment, we're still above the 20 weekly, we're still above the 41,000 middle top area for the accumulation, and we're still above the green cloud, the green portion of the cloud here, which is still green. Even though it's flat, it is still green. So not particularly bearish on it in the very short term. There are certain signs to suggest that we might come down further. We could enter into a bear market, but so far it's actually okay for me. I'm alright with it so far. Incrementally breaking down from these levels obviously would not be a good sign, because if we think about this on the long term, we've got a top, we've got a low, we've got a lower high, and are we going to forge a lower low? And if that is the case, then that is the hallmarks of a bear market, and potentially we could be looking at a bear market already. We just don't recognize it for what it is. We're maybe in denial. So this is what a bear market looked like last time that we saw it. We had a nice big run up, we had a very clear top, We broke all the way down to the 20 weekly, had a nice bounce, broke down massively, came up above the 20 weekly, broke down massively, and then remained more or less below it. There were some portions where we did break above it. Now this chart here is just the Binance chart. It's not the best one to look at because it doesn't go back that far, and it's not my intention to really go back that far either. But one thing I would also like to note while we are on this small chart is that this is September's high, August, and this was a pullback of 44% in the last stages of the bull market, leading up to the big bull run, which basically from the very bottom there to the very top there was a 500% move. Now, I'm not saying that would happen again this bull market, but it is worth recognizing that massive pullbacks can take place just prior to a big bull run. The bull market for me should still fit the 4-year market cycle as it always has. I don't really see why it wouldn't. The only argument that I could put against the 4-year market cycle is that a lot of money came into crypto, essentially creating the bubble, which could have potentially popped here. There was a lot more interest in it because of large investors like Elon Musk. There was also an enormous amount of money printing in America, causing any asset pegged against the dollar to increase in value. Stock market going on to all-time highs, Bitcoin going on to all-time highs, basically because the money tap was turned on, devaluing the dollar, inflating anything that's pegged against it. So those are two reasons why the bubble could have already popped around here, potentially. And that's what all a market cycle takes to pop. It doesn't have to match 4 years. It just becomes a point where there is an overvaluation in the asset, whatever it is that you're trading, in this case Bitcoin, an overvaluation. And that's what happened here. It marked a top and we popped. And there was a lot of money flowing into Bitcoin at this level, and it popped. And there was also a lot of money flowing at this level, and potentially popped. So it doesn't mean that we have to go all the way to fit the exact same time frame, December, January, before we pop again. We may have already popped. We might have already got too overexcited, too overinflated, too much money got into the market and popped. You could argue essentially that this actually was a pop in itself. This, in my opinion, marked the actual top for Bitcoin, and then the money started to really turn on, because our money flow index on the weekly marks tops quite well, and we got a top here, and a top here. This also, interestingly, is where the alt season began, and alts have basically been going crazy since January all the way till May, until that actual pop. So there was a difference here to the tops that we've seen in the past. This was a massive bubble pop. This was, I suppose, a derivative style bubble pop, because we'd marked the bottom for Bitcoin. Everyone got very excited, and then we popped, went into a 6-month bear market, and this marked the top. But then the rotation kicked into from Bitcoin to altcoins. We see that very clearly when we look at the Bitcoin dominance chart. That was the money flow index Bitcoin top, and then money came out of Bitcoin into altcoins, as well as lots and lots of new money, until of course the entire thing popped around May, and we've basically been umming and ahhing about what's been going on since then. The Bitcoin dominance chart is still a bearish chart, I have to say, coming down to this level, bouncing, down to this level, bouncing, and this level goes all the way back to the last bear market, right? So there is that does match, but like I say, I can't entertain a bear market at the moment, because we're still above the 20 weekly at least, and we're still within the upper range of the accumulation phase. And the 4-year cycle, I still think, despite the argument that I just put against it, should still stand, because it always has. But again, cycles break all the time. In traditional markets, they break very often, and Bitcoin has only had 2 completed cycles, so why not? Why not have a failed cycle at some point down the line? It's inevitable that it will at some point. Maybe this is the one that it has. So, in the very short-term timeframes, which is what we're going to have a quick look at, and short-term timeframes aren't that useful, especially when we've got an enormous amount of things like the Dixie and traditional markets that will all be, I suppose, the traditional markets will be opening later on today, and could easily have another sell-off, and that would create a Dixie that goes up to further levels and create a Bitcoin that goes back down again. But on the hourly chart, not that this is something I ever reference, but on the hourly chart we do have a good deal of bullish divergence taking place. Maybe that's already played out. There are areas that we really need to get above, and we kind of just reclaimed it at the moment. It's an 8% bounce, not too bad. We are at the moment opened a candle above the center of this Bollinger Band, meaning that we might, and again, might is the operative word, be able to have a bit more of a sustained uptrend today. Continued bounce. So we'll bring it to a 4-hourly. What do we see? We don't see anything particularly exciting on the 4-hourly. We see problems really becoming a bit more apparent with that death cross and things like that, and being below the cloud and all major moving averages. So in order for this to get bullish again, like really bullish, we're going to have to get above this 200 exponential on the 4-hourly. 46,500 we'll call it. Each day that goes by, that will be lower. But there are also resistances. All these moving averages are resistances. If we go to the daily, what we see, again, below all major moving averages, being above the 200, which is 41,600, is still okay. Again, it is going to be one of those situations where we just have to wait and see what's going to happen, because there are bigger forces at play. The Dixie, in my opinion, was looking for a breakout and probably still is looking for a breakout. This is a more bullish chart than what we see with Bitcoin. We've freshly golden crossed. We are tapping this area of resistance. So 1 tap, 2 tap, 3 tap. My expectation is that we do break out and we go up to these levels, maybe 94 to 95. And that would also tie in quite nicely to if traditional markets actually do break down, that's where the money will go. The Dixie will increase, and we'll see a stronger dollar, and we will see a stronger Dixie, and we'll see a weaker traditional market, a weaker precious metals and cryptocurrency. And this is this is what we were saying last week. We don't want to be entering into anything particularly until we see an actual rejection, a true rejection from the Dixie that will be able to help us, mark a bottom for wherever we are. So we are getting rejected here, and this could be the rejection. This could be it. It's a strong resistance zone. Spent a lot of time below it here, and here, and potentially here from yesterday. But the nature of this chart, the way that it looks, does look good. I do like the way it looks. Looks bullish, to be honest, on the daily. On the weekly, we could easily mark a top at 94, but generally it still looks quite good on the weekly. It is reversing, in my opinion, and that would be a bit of a problem for everything else. And so until we get an actual rejection, not this, which is probably just consolidation, after what we've after what's taken place in the last couple of weeks for the Dixie, it's probably just a consolidation after its run, which has been a nice run for the Dixie. I think we probably will end up breaking that resistance, but until we do, we're getting rejection now, which is fine. We'll see how the rest of this plays out, but my expectation is that we will reach 94 and maybe even push up to 95 before a decent rejection, and that would likely mark a bottom for all markets, traditional and crypto. Right, so this has been a long rant, and hopefully there's been value in that for you. It's just an addition to what I've been saying, I suppose, over the last few days, and maybe even going back a bit further than that, about just being careful as the Dixie looks strong, and there can be shock in the market when the Dixie breaks out. This has not even been a breakout yet, so that's the one thing you should take away from this. We haven't actually seen a breakout of the Dixie. We've seen a retest of the highs. We've not seen a breakout. A breakout could be nasty. For anything and everything. But my expectation is that if we do get a breakout, this would be the absolute top, and this is where we would think about, well, me personally, think about entering into long positions, because I'm not a derivative. I'm not a person who uses derivatives very often, and if I ever do, it would be based around something very, very strong and tangible, and this would be one of those things. Dixie looks strong, looks good, but how far could it possibly go? 95 being the absolute top for me, then breaking down from there significantly, probably throughout the rest of the year, and at that stage, we will be looking at, well, that would be like a bull run, wouldn't it? That would be the completion of the bull market for Bitcoin. It would be appropriate for a long position, low leveraged. Obviously, I'm not your 100x type of guy, but a low leveraged long position based around dollar weakness. Anyway, I'll leave it with you there. Thanks for watching. I hope you have a nice day. Take it easy.